that they make, and I guess also really more inclined to invest within their scope of influence. For whatever reason, I think probably could just be because of just their model of investment. And then also when you look at the different stages of startups in different markets as well as economies, like Marina said, I will give an example of Africa. Say, for example, the typical Series A in Africa would probably be considered a seed, stage in Asia. Reason is because the markets are very different. The level of traction, being able to gain traction in places like Africa, where there's just not enough infrastructure, just various other myriad of challenges that African startups face, it really sort of gives us an eye as well to look into just the level of resilience. If by the time you see a startup in Africa reaching Series A or even Series B, or hell, going on to levels of unicorn, they have gone through a multiple of challenges, not just in traction, not just in fundraising, but just generally just overcoming the infrastructural challenges. So it's very different, Asia, in comparison to other countries. Even when you look at Asian investors versus the American investors, there is also that level of risk aversion that is within Asia that is a little bit, a lot higher. And even given I guess I don't want to suppose COVID as well, but during this COVID time, yes, the ticket sizes have actually really increased. But Asia still sort of is a lot more risk averse. They're not as bullish in terms of international investments. That's just my opinion. I'm Liz and I'm done speaking.
That's fantastic. Thank you very much. PB, would you like to also tell us about, what does it look like in India?
Yeah, makes sense. Before the speaker, Marina, Liz, and Skylar, all of them mentioned a very key factor. I'll also agree to that. Mostly the difference that Asian and US market have seen is the key difference, which is mostly there, is on the maturity of the founders and on the tech. To be very specific, you will find great technologies been built around in US, and comparatively, if you compare the same kind of startup and same kind of founder building the same problem in an Asian market, you'll find less compatible tech as compared to a US founder, and mostly this is at same when they are going for their initial fundraise. For example, if they are raising their seed round, you'll find more maturity in a US founder. That's what usually we have seen. I do not want to generalize the things, but at the same point of time, that is something which is there. So it becomes easier for them to price round at a good pace, price the round, have a greater valuation, and also raise a larger ticket size. So these are pointers that definitely a mature market or mature founders have. And mostly, if you see the American market right now, most of the founders are experienced or second time or third time entrepreneurs. Coming to India, what I see is we have more similarity going towards we are in a curve or a path towards the American market, because Indian market and Indian VCs are mostly ex guys from Silicon Valley, those who have their stint of 10 years or 15 years over there and came here and started the ecosystem all from scratch. So what I see in India is mostly we are in that curve or in that path, and chasing that kind of maturity. And over years in India, we have seen lot amount of startups going, lot amount of value and capital been created over time, and That's the reason in India right now, if you ask me, I'll give you a straight answer. It's more than easy to raise money, more than easy to have access to capital. If we would have been talking in 2014, the scene was completely different because there were no unicorns back then, not a lot of validation. Right now we have almost 50 unicorns in the market, homegrown, all of them homegrown, building for global markets. And that's the reason it's like raising money from India is right now comparatively easy, because a lot of family offices, lot of second time founders, like the guys, those who have already had a good amount of journey with their first startup, they are right now also into investing and also contributing back to the society by investing. So that's what I see. Like, Indian market is a little bit more mature, if I say, but still, if we compare with American markets, we are way behind. And that's what I will say. You can say that China and India are both markets, those who are it is growing at a very faster rate, and both of the market have huge potential because of the population out here. And that's the reason it becomes a easy ground for testing your product. I suggest all the founders that come and pitch to us, we're if they say like we're building for a global brand, or we want to go to US and do stuff, we simply tell them India is very big market. Like, just cater to the Indian guys for now, and have your product market fit. Then think about US, because in India itself it's very bigger. So at some point of time you'll think like 5 years or 6 years down the line, you might also change plans not to go to the other markets, and stick to the market and solve problem for the interior India as well. So that's my point. Like, if we compare raising money right now, capital is more accessible right now for the founders, and from the investor point of view, the check size have also increased. Seed stage company are having insane valuation right now as compared to earlier. And so it's a growing ecosystem right now.
That's fantastic, PB. Thank you very much for that perspective. I'd love to also ask the founders in the room, and I know a couple here have experience with the international markets. Justin, I know that you actually raised from a Korean venture, didn't you, Kakao?
Yeah.
And you also have other experiences. So would you like to chime in?
Yeah, I can add quickly. So yeah, I've met a lot of Korean VCs and also US VCs, and there is a clear difference. So first of all, we're actually based in North America, so we're a US company. So the first hurdle that we had talking to Korean VC was actually checking if they can even invest in international companies. So due to some of the VCs, due to the source of their funds, they're not even allowed to invest in international companies. So that was the first hurdle we faced. And the second hurdle, as Liz mentioned, I mean, it's hard to generalize Asia overall, but at least in Korea, I think it's a little different from China or India, where their local market itself is so big. But Korean market compared to other Asian market are in the smaller side. So they're definitely risk averse, but also very conservative. Not because VCs are conservative, but also I think the founders are conservative. And overall, I think that probably comes from the cultural background, where maybe the startup ecosystem is early, is still in early stage in Korea. So there are not many unicorns or big successful cases. So they are probably risk averse, but also the founders themselves, I think because of the cultural background, they're more on the conservative side, which makes the entire ecosystem to be a little more risk averse and conservative, and still also less conservative for international companies. So that's kind of my experience with Korean VCs, and yeah, it was, so that was kind of there are so many challenges that we had to go through to actually find even the VCs who could invest in us. So that was my experience. Yep.
Thank you very much for that, Justin. Kai, would you like to also share your experience from this side? Kai, are you there? If not, love to maybe open up the floor again to the audience. Audience, if you have any questions, please go ahead and just click on the little hand raise button on the bottom right. Today, our topic is about fundraising and challenges. I'd love to have some more questions because we do have such a great group of moderators up here. And so it looks like we have someone here. Carl.
Hello, everybody. Yeah, this is Carl from the Philippines. And I was just listening to Prajin. Yeah. Sorry, how do you pronounce your name? Sorry. Prajinensis?
It's Pragyashish actually, but I
Pragyashish.
think I have to change my name now.
Okay.
It's very difficult to pronounce. I know that. So it's
Don't change your name, Praj. Don't change. We have to learn it.
Yeah, don't change
Okay.
it, by the way.
Okay.
How do you say
Anyway,
it?
yeah. Pragesh. Hello?
yeah. Go on, Carl.
Yeah, anyway, so this question is for you and for everybody else. First of all, I'm co-founder and chief strategy officer of Go Philippines. We're an e-commerce platform that provides education benefits to grow our ecosystem. And our main partner right now is Microsoft, LinkedIn, and GitHub. And we're going to be rolling out the largest upskilling and reskilling program in the Philippines. And in relation to what you have in India, we're actually preparing to deploy to India, right? And my main question is, how do I strategically engage Indian VCs in a big way so that I can show to them our pilot project in the Philippines as Go Philippines, and eventually interest them to deploy the same system for Go India?
Makes sense. To be very honest, what I have seen is to be in India, mostly VC want you to have Indian entity over here. That makes easier for them to invest in your in the Indian entity and not the parent company.
Correct.
So that's first, which attracts a lot of people, because we have also, like earlier mentioned, we have a cap to invest as well. All the investor, we have some boundaries and some limitation to deploy capital outside of India market. So if angel, they can invest up to 250K and maybe 300K USD, not more than that. Similarly with VC, mostly their funds are created for the Indian market, so that's the reason they do not plan to deploy capital outside. So it becomes easier for you to have an Indian entity first, and
Okay.
same point of time you have to either you have your tech office over here, or just start with the market, or just take a specific region, come to Bangalore or Mumbai or Delhi. These are three places where you'll find the startup ecosystem to have grown immensely, and you'll find the local good talent, resources. So it becomes easier for you to set up over at any of the places, and post that you have to while you are planning to do your fundraising, you have to have find a lead either from the Southeast Asian market, or If you're not able to find a lead, you have to start building from scratch with a network around and with the Indian VCs, because Indian VCs are typically they love to see kind of traction, and they love to feel that yeah, this is something we can look into. And Indian VCs come at a very early stage. They're not very curious on companies, and mostly they come when you have some kind of ARR or MRR in you're doing couple of good revenues or deals. Then they'll took a keen interest in you. So first, you have to rounding up your question, I'll just summarize. First, you need to have an Indian entity. That becomes much more easier. Second, you need to have some kind of Indian guy coming to your board, or maybe it becomes easier for you if you have a founding team of bunch of guys in the Indian market, from a bunch of resources or bunch of guys joining you from the Indian market. Those who are either well connected in the startup circuit, or at least can provide you immense amount of resources. So it becomes easier for you to have that kind of a guy in join you in the founding team, or as co-founders, or India CEO for your entity. And then it becomes much more easier for you to do the fundraise. So and the third is you have to build your strong traction, and then the Indian VCs will take a keen look at you.
Oh, thank you very much for that. And one suggestion was, setting up an entity in Singapore as a launching ground for India. Would that make sense? Or
yeah, that will make sense. That will make much more sense. If you are already Singapore registered, we have a very, very you can say good faith on Singapore, because most of the companies, the big unicorns that are Singapore registered. For example, I'll talk about Flipkart. That's their first big unicorn, which got acquired by Walmart, and they are a Singapore registered company. So yeah, the Singapore registering in Singapore makes much more sense as well.
Okay, good. Thank you very much, everybody. Thank you.
Thank you, Carl, for your question. I'd like to do a quick refresh of the room, I guess, and then I can ask another question to the panelists. But again, this is the Asian Startups Club. We are a club that's dedicated to talk about all things related to Asian startups. We meet every Tuesday at 7 p.m. Or every Wednesday morning at 10 a.m. Hong Kong. Today's topic is on fundraising challenges. This is something that I get DMs about, I get emails about in reference to this question specifically, and it seems to be a question that a lot of entrepreneurs have. So if that happens to be you, please do come up and ask your question. We do have a wonderful group of moderators. And in a little bit, I will be passing on the mic over to Leonard, who's going to be asking a couple of great questions over to the panelists in the meantime. But please do make sure to come up here and ask any questions if you have any. And Leonard, I'm actually going to pass on the mic over to you.
Sorry, Sean, I wanted to just quickly ask a question, if that's okay. Really quick one.
Please.
Okay, so I was just sitting here listening to Carl and PB, just their exchange, and it just made me, the last bit where he talks about whether he should set up an entity in Singapore, it just sort of made me wonder, why is there this perception? Or, I mean, is this, I'm trying to figure out how to frame my question. So what would be the difference between Singapore and Philippines? I mean, they're both in Asia, right? So is it because Singapore has produced more unicorns that is what would make the Indian investor more inclined to invest in Carl's entity if it was based out of Singapore? I'm just trying to understand the I guess the rationale behind that line of thinking. I don't know, and I'm not attacking you, PV. I'm just trying to understand why it is so. Because I mean, these are countries that are within the same look, I guess, on the same continent, and so what would be the difference?
No, you're absolutely correct, Liz. Like you mentioned, uh, this is a perception that mostly, but I'll say like it has been made over time because of the success rate or the returns that VCs have generated from a entity in Singapore rather than any other place in Southeast Asia. So it has become over time a perception. If you are a Singapore registered, it becomes much more easier to you to fundraise and typical and this is because of the success ratio only, and I do not see any irrationality in that, because what happens with most of VCs are have their own thesis made over time, and that thesis again matures over time as well. So initially, if they were investing, and after 10 years, they become more smarter and they want good amount of returns to be made for their LPs, those who are supporting them. So that becomes a kind of, you can say, a mindset over time that, yeah, these are the places, or these are the companies, or these are kind of sectors. So that's how it has grown over time, and I do not personally find any irrationality in that. But nonetheless said, the ecosystem is growing and everyone is learning. So there is a lot more things for both the side of tables to learn. Yeah.
Yeah, that makes total sense. I absolutely understand that it definitely is a mind set thing where at the end of the day, as much as, the VCs and they're the fund allocators, they are also human. And they obviously, if yeah, just because a person has money does not mean that their mind is going to be skewed towards just the fact that he has money. So I understand what you're saying.
Sure.
It is unfortunate, however. I think it sort of doesn't really level the playing field for the founders and the startups. I mean, just listening to Carl, for example, he seems to have a really great model, and it would be unfortunate for him to not get funded out of the fact that he's not based strategically, I guess, strategically located.
Absolutely, it make what you're saying is absolutely correct. But this is a mindset that have grown over time because of the success rate, I will say, mostly that these VCs have seen. But to be very honest, angels in India are more open and more adverse towards taking risk, or mostly understanding the person. So if they're trying to tap into some angels or some founders, those who have taken exit and started their fund, these are the kind of funds they are very open to investing in Southeast Asian markets, and not only Southeast Asia, Asian market as a whole. They are more adverse to the risk that than Indian VCs, those who come with very large check size and come with mostly around pre-series A or series A. So that's what I've seen right now in the ecosystem.
And you're right. You make a very good point. I will give an example. Say, for example, in Africa, there is that, what is it called? Herd mentality, where we are starting to see a rise in investment within the fintech space. And now every VC or every investor you speak to on the African continent seems to just want to only invest in fintech, because we've, I guess, now produced a lot more unicorns in that space more than anyone else. So you're absolutely. I think that success rate will cause that ripple effect to probably forge this movement towards one area because this is what works, and so everybody wants to obviously invest in what they believe works. So yeah, I'm hoping that as the ecosystem grows, obviously that mindset will change. But yeah, I'll stop here. Leonard, please take it on now. You can go ahead before I continue to hog the mic.
No, that was awesome. I mean, this is exactly what this room is for, right? Like, we want to dive deep into issues that I think, a lot of folks may not be able to even ask the questions sometimes, especially as first-time founders. We're struggling to even know what areas to even explore and uncover. So that's a great use of this room. And Tim, I know you just joined us. I would love for you to introduce yourself. And just for context, Tim and I met several years back. Gosh, it was probably for your Fund 3, I think, when we were initially raising our seed round. So I've always loved our dialogue. And so, Tim, if you wouldn't mind introducing yourself, that would be great.
Absolutely, yeah. And I'm driving, so if there's too much noise, let me know and I can talk later. But yeah, I'm Tim Young, founder of ENIAC Ventures. As a two-time founder before that, started a company in Beijing and one in Boston, sold both of those, and then founded ENIAC 12 years ago with 3 partners from undergrad. We're all engineers, serial founders. We've started 10 companies, venture-backed companies, and sold 8 of them before ENIAC. And we've raised about $500 million in the last 12 years out of 5 funds. Our 5th fund is $125 million fund. And we write checks between $500,000 and $3 million into seed rounds, and are generalists. I do a lot of fintech. I cut the tail end of that last bit, but we're generalists. We do everything from Airbnb to SpaceX, and also a professor at University of Hawaii, and a patent attorney, and just love to help out founders and talk about fundraising. So look forward. Thank you for being up here, and all familiar faces up here, and really phenomenal moderators. I'm really honored to be here. Thank you.
Thanks, Tim. That was fantastic. And I'm always so jealous when you talk about the fact that you are a professor at University of Hawaii. So anyways, I'd love to jump into maybe another question. And I know this is a question that typically comes up for a lot of first-time founders. If you don't have a network of investors and VCs to tap into, how do you guys think, and maybe if you are an investor right now, maybe if you have an example of a company that you've actually funded, and perhaps if you were the first check in, but they didn't have that built out network of investors, how did they go through that process? Or if you were a founder, how did you go through that process of finding investors when you didn't have that network to begin with?
I can really jump in. I mean, that's a tough one because most investors, cold intros are really tough. And so most investors key off of warm intros, so the conversion rate's much higher. I think I've been thinking about this more and more. I think the best entry point is through incubators and accelerators. YC doesn't care that you don't know any venture capitalists. They're just going to judge you on your background and your team and what you've built. So if you get into a YC, you're going to meet thousands. You're going to meet every investor in the valley pretty much. So it's also a great way to build a network. If you want to become a venture capitalist, the best way to do is start a company, go through YC. You'll meet all of them. So I think incubators like 500 Startups, Techstars, and the list goes on and on. There's, I can't name them all. There's a lot of really phenomenal ones, but they all have demo days and office hours, and it's a really great way to get access to venture capitalists. You do pay you pay a fee. You take on capital that's very low valuation, but you usually get 100,000, like 150 grand, I think, from YC. You get a little bit of working capital. You do give up like 7% of your company, which for some I think is not worth it, but if you don't have a network in VC, it probably is. You'll get a lot of other help and assistance, and then it kind of kicks off your network and your fundraising. So I think that's the best way. I'll leave it at that. I have other ideas as well, but I think that's a good place to start the conversation.
I'd love to chime in, actually, just real quick. I think that these type of pitching events, I think it's great. I also think attending conferences, I know it's really been tough right now, but going to these conferences and just kind of meeting and mingling with people, I think would really kind of jumpstart your networking ability, whether it's to find investors or find mentors or even finding an advisor. Whatever it is, I think it's really, really helpful. Whether it's going to NOAA out of the UK, whether it's going to Rise out of Hong Kong, whatever it is, I always find a lot of value attending these conferences and kind of just networking and learning and kind of talking to just a lot of different people.
I can chime in a little bit about that question. As Tim said, I think getting into an accelerating program is probably the best way of getting introduced to other mini VCs in that in the ecosystem. But I think some of the first-time founders are struggle to even get to those accelerating programs. So maybe I can share my experience on how I got to SparkLabs, because even SparkLabs or YC, their acceptance rate is like 2-3%. So the way I got in is there was a MIT bootcamp organized by MIT in Boston, where I actually participated, and I won the second place. And actually, one of the admin of the MIT bootcamp was a friend of one of the partner in SparkLabs. So I got warm introduction to SparkLabs partner, and that's how I was able to get into SparkLabs. So actually, getting into even accelerating program is not easy for first-time founders. So looking into other programs or bootcamp that actually might help you to build some credibility and get some connections to accelerating program and partners that can actually help you to get into YCs or other accelerating program around the world.
I'll just chime in as well. So, as Team, Sean, Justin, all of them mentioned that networking events and accelerator programs, these are like two key things that becomes like the deal becomes a hot cake for any VC. To be very honest, I'll say you, in last 3 years, from the Indian point of view, every single a company that has gone to YC is a hot deal for Indian VC, and they've raised insane amount of money, insane. So it becomes very easier for you if you're part of a accelerator program, or if you're pitching somewhere at some kind of conference, it becomes very easier for you. But nonetheless said, I'll say every founder should start building a network before even planning to do a fundraise, because that's very important. Once cold emails and cold intros are very difficult, and some point of time it's not that it takes time for you to raise, but at very early stage, being most important, it actually diverts you as well. And some founders also just they are not motivated if they do not find answers or they do not receive any answer from the cold emails that they're sending across. So it's very important to build network, and it becomes much more easier for you to do a fundraise. So just start building your network. Just try to go to conferences, hop in, and even if on social media or places like Clubhouse itself, it's very easier right now. Right now, networking and having access is more than easier from earlier it used to be. So it's always better to have that kind of network built around, and it becomes much more easier. And the next step is, or else you build a solid product and go to some kind of accelerator program.
That's great. And Marina, you had a thought there?
Yeah, maybe just to add a little bit to the conversation. I think if I look at our deal flow and the way that we do have access to deals, there are a lot of it that do come from the accelerators or from other VCs as well. So usually, venture capitals operates all of them operate in a network. And there are some that are a little bit closer than others. And if there's a deal that doesn't fit a VC, they would, definitely pass it along. So I would say always ask for referrals. Whenever you talk to an investor, just always be, I think the friendly attitude is something that works really, really well here, especially in North America. And I'm sure it's the same, in Japan and Korea and in Asia, where the VC ecosystem is probably even tighter. So always ask for referrals and have your small database of contacts where you can track who you talk to and what was the highlight of the conversation. And sometimes as well, if you ask founders, like, can you introduce me to maybe that VC, or if you've talked to them, we do, get sometimes deals that are referred to us from founders that we have invested into and we were their first check. And some deals would definitely come to us that way. Cold calling, I think this is definitely not a good option. It requires a great amount of skill set to formulate this very nicely and concisely, and making sure that you catch the attention of that person particularly, and the success rate is probably less than 10% for cold calling. So I think that the key takeaway here is always keep track of the conversation that you have and the network that you're trying to build upon. And if you ask for referrals, for warm referrals, it always works wonders for you, and this is going to open doors wherever you are. So always keep that in mind.
I love that. I would actually love to double click on it a little bit. Referrals, I know, can come from, as you mentioned, other investors that you co-invest with. Typically, it can come from founders in your portfolio. It can come from other folks within the ecosystem. How do you guys qualify the referrals you get? Like, are there specific things that you typically look for? Like, obviously, if you have an exited founder who's done really well, they probably have a keen sense for picking out really strong founders. But maybe beyond that, what else do you guys consider when you think through the different referrals? Because you probably get hundreds of referrals a day or a week or whatever it might be, and you still have to kind of qualify those.
Yeah, for us, honestly, it really is a matter of fitting our thesis, because our focus is so particular and so specific to AI. It's really hard for other VCs to say, hey, this could be a good deal for you, because we don't have a lot of AI focused VCs around us, and there are probably a handful, in the US, and I haven't seen more than one in Canada. And we're coming here to the stage as a foreign VC because we're headquartered in Silicon Valley. So everywhere we go, we've invested in UK, Israel, Japan, Canada, and US, and it's hard to find other AI focused VC that can give you a quality deal that a deal would come with revenue criteria, strong team, and etc., and all the checklists that you want to have. And so what we did is that we passed along a small one pager that's very simple about what we're looking for, so that they can keep it for themselves. And when we do get a deal that is referred to us through a VC friend, for example, the key criteria that would catch our attention would say, if something that comes very warmly and that say, hey, I really love the team there. They're just awesome. But for example, it's too early stage for us. You want to take a look at it. And by the way, did you have some very strong line of revenues? Nothing that's if you look at the forecast, I don't want to hear like they are pre-revenue today, but they will hit like $50 million in ARR next month. It's just not possible. So nothing that's too extravagant, but if we do have key numbers, usually when we get referrals from VC, it always comes like in an economic manner, like you have a small economic summary. So these are the key numbers for the EBITDA, for the revenue. Great team, great background. This is core tech AI. It probably fits what you're looking for. and look at it. And we know each other's focus of interest. So if I say these days I'm looking at quantum, and they say, hey, Marina is looking at quantum, and there's a quantum deal happening, maybe I'll send it to her. Or if I say, hey, maybe I'm looking at space tech, I love space tech and health technology as well. We keep this conversation active, and these keywords are actually very important in the discussion, along with the key numbers. And then it comes with the deck. We look at the deck, and then if we want to have questions, we'll follow up with the founders. So it's just that, the amount of information that's given between VC is not necessarily exhaustive. It could be very short and simple, but it's very tied to the point in terms of key numbers and maybe something very specific. What is their UVP? And by the way, the team is fantastic, something around those lines.
That's interesting. I whenever I give a referral to any VCs I know, I always tell my founder friends I'm probably a bad referral because I talk about the good and the bad. So I try to give a balanced outlook on the team or on the startup because, obviously everyone's sort of evaluating deals and they want to understand risk. And I know a lot of intros can be all about like, here are all the best things about it, right? But clearly there's some outages or things that they have to work on, right? And so I don't know if my approach is always helpful, but who knows?
There's something that's important here is that there's a very conscious approach right now that some of the VC portfolio was built on FOMO, and we're trying to avoid it. And so, as soon as you know that your big VC friend who has like 10 times your AUM is currently investing, and there's a little bit part of the deal that's left over, and you're trying to jump on it, this is usually what we're trying to avoid. And so that, if you keep that in mind, you want to send a deal without necessarily saying who is investing, but that the investor will ask you that question because you want to know who's participating, and if you can be a lead or a non-lead, and it all depends a little bit on the situation. But sometimes I kind of think that whenever a founder is in the position to do cold reach out, if you actually send it the way that we send it between ourselves, like, these are just put the key numbers first. We have a partnership with major big brand, blah, blah, blah. And this is our website, and the tech UVP is this. Because if you look at IDs, you can have like a dozen IDs for a dime, literally. And this is very, if I'm looking at breakthrough tech in HR to find qualified leads in AI, and this is the number of AI talent currently in Korea is depleting, and there's a shortage, and so we get this type of deals that come to us. This is the only tech firm that's AI powered and that would be able to find you the right candidate for the right job. They won't leave the job, and they're going to stay with a commitment of at least 1 year, and we've tested the skills and etc. And I get this type of concept like at least once a week, and then they come to us and say, we're the only one. I can guarantee you're not the only one. If you thought about it, there are at least 100 people on earth who thought about it, and so unfortunately that's the reality. But if you actually remove all the things that we taught you in accelerators and in places like that, how to build your pitch deck, whatever, if you just put the key numbers, I have traction from that big brand, and I'm making that much revenue from the contract that we just signed. And literally in a summary, in plain English, like explain like I'm five, we're HR tech based with special unique point, which is some secret sauce, AI based, whatever. Then this is gonna catch my eye much more than reading a full deck, because we see this concept all over again. All the pathology thing, like when you do ultrasound, the AI guided ultrasound, I've seen like 10 different last week. Just all this tech that are all so similar to each other. And I don't need to read the deck. I just need to take a look at the tech very briefly, the team, and they will tell me yes or no, we can keep the convo on. So I think that sometimes, if you actually shorten the short intro with like 2 key numbers, 1 UVP, 1 website we can check out, and this is something super cool about us, this would probably open more doors. But that's just my opinion, honestly.
I love it. Simple, plain English or whatever language it might be in. But because there is a lot of jargon, right? Like I bet a lot of the investors on the stage, they see like AI this and blockchain that and and like a lot of times I think people think that alone is enough to sort of convince someone like, oh, that's an amazing idea. Well, unfortunately, probably not, right? Because probably 99 out of 100 startups will sort of throw in a lot of jargon without actually a lot of the details. So. Very cool. I think we have a couple people on stage I'd love to ask that I think would either love to ask questions or introduce themselves. Paul, I think you're next in line. Would love to hear from you. If you have a question, feel free to start with that. Or if Paul is not there. Paul's there.
Sorry, I was trying to. Yes, sorry. Yes, I do have a question. We're in a stage where we're starting to sign bigger deals and we're trying to hire new people, and now the world is different. Everybody's working remote and people's expectations are different, salaries are different, everything, sort of a different world out there. And like, what advice? I just want to ask a quick question. What advice can you guys give to people when you're setting up new operations or new departments or even new groups, how to keep people, what tools and things and are people doing to keep people motivated, to get people onboarded quickly? We lack the like, hey, let me come over to your desk and show you thing, right? So what kind of, and because it's already, we're seeing like onboarding is taking a lot longer than it definitely used to. So what are some tips and tricks that perhaps we can learn from investors out there? I think, and by the way, we're a global business: Shanghai, Mumbai, and Palo Alto. Thanks.
Perfect. Any of the mods have thoughts on that?
I'll give one thought. That something that we've been practicing for during the pandemic, and it worked out pretty well for us. And after that, I'm gonna have to say good night shortly after. So something that we've been doing, it's coffee walk, and we meet in person. We really book like an hour or 2 hours with either somebody that we want to work with, or if we need to talk to another co-investors to review some files together. Sometimes it's just absolutely impossible to do this remote, and so we decided to go for coffee walks. And so we go on the patio. We just take 2 minutes, and it's good because it's friendly and it's not really office environment. And you can, if you can still meet in person, grab a coffee and have conversation and crunch down the numbers that you need to do and maybe the topics that you need to talk about, condense that into 2 hours and then give them the freedom to go home and think about it. Then we thought this was very productive. And if you don't have the possibility to meet in person, let's say you're not even in the same city, we do casual Zoom meetings about once a week to keep the team motivated and also on track. But it's a very weird question to ask investors, because I think that investors are mostly very, very autonomous. And I think that each team could be functioning like very well. Each individual would be very functioning by themselves, so they don't necessarily to be in a team to be fully functional. So it's my point of view, but it seems that this is what we see here. And venture capitals in North America did not have too much trouble going remote, because you work in the office if you are in the office, but you also do quite a bit amount of work when you're at home at night or early in the morning. So it's not really different for us to do it remote or in person. But definitely, if I can give you advice, if you have the possibility to meet your new onboarding, your new staff have some coffee walk and talk about everything that you need to talk. And then once they go home, at least they have some guidelines to be able to be fully autonomous. I hope that helps. And on that note, it's 11:30 for me at night, so I'm gonna leave quietly. And thank you again for having me on stage today. That was great.
It's always
Thank
great
you,
having you,
Marina.
Marina. Fantastic. Will, sorry, I apologize. I think I passed over you. Did you have a question, or if you wanted to introduce yourself? Will may not be there. We can go on next to Randy. Randy, are you there? If you have a question, we'd love to hear it.
Yes. So, hi, this is Randy. I'm calling from Hong Kong, and I just came on the site right now, so I apologize in advance if this question has already been raised. But for the investors in the room, either on stage or off stage, how are deals being done right now in regards to situations where you're not meeting the founders or co-founders face to face? 90-95% of the due diligence can be done on Zoom and Skype. But how are you guys who are investors doing your background checks and finding out how credible the founders or co-founders are? Thank you very much for your time and answering this question.
Great. I don't know if any of the investors want to take that. Liz, PB, yep.
PB, do you want to go? I can go after you.
No, you can go first, Liz.
Okay. So in my experience, I will give a couple of examples that we actually closed during the COVID time. Yes, a lot of investments are starting to take place virtually. And in regards to, I guess, the due diligence, what we do, because we're an investment advisory, and a lot of the deals that we do are actually on the continent. From Asia, we get funding from Asia and invest on to the African continent. So a lot of the deals that took place last year that we facilitated were actually virtual. But what we do is we actually have people that are on the ground that we work with, that we have employed, and that is on us because we are the facilitator. So we basically go in and we have, I guess you want to call it an advisor or an outsourced, consultant that actually sort of meets up with the startup, really does the background check and so forth. But generally, a lot of the background check, as well as even just due diligence, is done online lately, and it hasn't stopped investment from taking place. So this is my experience. I actually managed to close a couple of deals last year through this process.
That's great. And PB, you were in chime in.
Yeah. So adding to what Liz shared across, so we are also like we are completely remote right now as team, and also as with our portfolio companies, or maybe investing in new companies. So the process is very simple for us. Once we get into the DD process, we mostly deep dive, or we also have a third party agency working with us, those who take care of background checks at the local areas, like where someone is staying, what are the educational qualification, what they mentioned is or not. So some of the background check that we do is in place right now, but to be said, everyone is remotely working, and we understand that, and empathy at some point of time. What we do as investors is we trust people with our money, and so it doesn't matter like you're investing or doing a huge amount of research on them. It's always at some point of time you're anyhow while with funding them, you're anyhow helping them by trusting them with your money, that this person is going to grow that and is going to do and create great amount of value with that. So post this world, like the COVID world, that trust has, I believe, has become more stronger because we spent a lot amount of time. Initially, it were like couple of meetings or someone used to come to meet you, but right now we are spending a lot amount of time virtually. We talk to them a lot often. Like earlier, if we used to do maybe 5 or 6 meetings before investing in a company, right now we are doing like maybe double calls, like 10 to 12 video calls, and where we're understanding them, understanding their day-to-day work, and we're trusting them. At end, we're trusting everyone with whatever they say and whatever they plan to do. So yeah, so post this virtual has, to be very honest, for us, I'm not sure about others, but for us it has worked very well. We recently like invested across 6 to 7 companies, and they all have been doing good, quite amount of good. Yeah.
Okay. Well, thank you guys for your feedback. And one follow-up question is, with during COVID, and this is very legalistic, has it changed any of your terminology or any requirements in your term sheets, in your legal documents, or nothing has really changed pre-COVID and post-COVID? Thank you.
I don't know if anyone else has thoughts on this. I can at least give my perspective, which is I haven't seen any changes in the actual term sheets or like side letters or anything else that folks are throwing into any sort of financing round. So maybe there are some folks, especially like if you're in maybe like a D2C context where you have maybe supply chain issues that might have been affected by COVID. I don't know, right? Like that might come into play, but I honestly haven't heard it across any of my friends or any of the investments that I've seen. So if anyone else has thoughts, I'd love to hear it. But probably not. So, Sean, go ahead. Or PB.
I don't think there is any changes.
I'll echo that as well too. And if there are changes, I would say that if anything, it's getting a little bit more founder friendly. And my suspicion is because we're seeing a lot more competition for capital and for these deals. So we're seeing these like non-dilutive types of funds of capital, alternative capital, and we're seeing SPACs out there, and we're also seeing equity crowdfunding. And I think that because of that, we're seeing much more founder friendly terms coming up. And I'd love to kind of see how it actually ends up looking in the next year or so. But thank you, Randy, for your question.
Perfect.
Thank you.
Great. And if you're there, we'd love to hear if you have a question. Otherwise, we can move on to Maxwell. And for anyone else in the audience, we'll try to wrap this up in about 20 minutes. So if you have a question, definitely feel free to come up. We'd love to answer it. So if Will's not there, Maxwell, we'd love to hear from you if you have a question.
I do actually have a question. So ladies and gentlemen, thank you for allowing me to be on stage. I'm currently developing a B2B system for remote taxation. So the general idea is negotiating the regulatory environments between countries to allow for more high-tech skills to be outsourced. So ultimately, we're looking at jobs like machine learning or risk, for example, or any type of software engineering, where there are certain restrictions pertaining to the capital flows of income to a particular target region for the outsourcing or the actual host nation of the business. So the idea is to, and what I've built a network around is having the regulatory interpretation of these tax laws and then having a B2B, I guess, software as a service, to use as many meme terms as I can, but to have this sort of done automatically and be a manager of payments of income, essentially, right?
Got
So
it.
my question to the table would be, with the liquidity out there, with all of the sort of quest for yield, right? And in particular in VC, you know, you're looking for a high multiple on your investment. At which stage should I be looking for investment? Because as of now, I believe, I believe in bootstrapping, and I believe in using my own intellectual capital plus my partners to sort of build out the foundational infrastructure of this type of an idea, right? So the principle is give as much ownership per country as I can to a native of that country. So my goal is to, retain 5% or less of each business in every country, but then sort of be the overall transactor or payment processor of incomes cross-border, and then having a mechanism to pay the transfer payments to the host nation of the business, but then also the remuneration that the countries that the workers are in, because obviously if we're going to continue to develop this,
Excellent.
as been mentioned. Sorry, go ahead, please.
What was the question again? I'm trying to put in context everything you're talking about. But
so the question is this: is that at what stage should I be searching for investment? Because as a bootstrapper, I don't want to give away too much equity at an early stage, but at the same time, obviously, you need to have capital to start expanding and start marketing and all the subsequent processes.
Got it. Perfect. And how much traction do you have at this point with customers, revenue, et cetera?
So right now it's a technical build out, right? So I'm not comfortable launching to customers, but at the same time, I'm starting to sort of feel into the reeds to see at what stage should I be looking for this additional capital. I know it's going to require a team to actually build this out, but at the same time, by providing ownership to people in the countries where the outsourced workers are going to be coming from, I've had an ability to really get people to work almost for free.
Got it. Thank you.
Matt, sorry, I don't know if you have already covered this, but I was listening to you. How have you managed to overcome the various different tax regulations across these borders?
So that's the whole thing, right? It's a preemptive strike on the regulations that are going to be coming, because remote working is here to stay. I think we can all acknowledge that. And you look at companies like Facebook, where they're now starting to pay their employees in different regions the cost of living in those regions. So the biggest burden is the allocation of transfer payments, right? So to do that in a simplistic way without having burdenous accounting costs on each individual business, that's kind of the goal.
Liz, did you have a thought there, or?
I was just thinking, I think it's Switzerland that I know that has sort of recently signed a mutual agreement on for remote workers. Yeah, it's just, my concern is just, the question of the invariably that the tax obligations on the employer in relation to its foreign employees. That's kind of what my concern is. But I think if you so is this a model that is already working? Have you tested it out?
So it doesn't currently exist, but I'm working with people in, well, right now I'm targeting growing economies, right? So countries like India, countries like Vietnam, places like this, and working with natives to understand their regulations, but then also interpret North American, European regulations, and then build the mechanism to essentially facilitate the payments of income to a person in that country. So to your question, it currently doesn't exist. The challenge is essentially building something that doesn't exist, right?
Totally. And I think there's a little bit of a chicken and egg problem here, right? Because I can understand that there's probably this is a heavier technical lift to actually build something. But from a VC or an institutional capital side, my guess is you will meet some resistance if there's nothing actually built. Like if there's not technically a product yet, if there's not customers that are willing to pay, or if there's not revenue, right? It's harder. Not saying impossible, but harder for investors to really lean in and write a check for that. Unless you have something that is really something that kind of shows that you can de-risk the investment. So let's say if you were a previous exited founder, you had a good 9-figure exit prior, right, and you're starting a new company, then that's usually a pretty good signal for a lot of investors to be like, okay, at least this person has done it before. So we can then make a bet on this person, even if they haven't started building out the product. I've seen that happen a fair amount. If you don't necessarily have that, it's going to require a lot more information for typical institutional investors to really say, hey, okay, there's a lot of de-risking that has already happened for us to make a considerable investment in this company. And so, without knowing kind of your background more specifically, like maybe you've done this from a research standpoint that has proven this out incredibly well. And so you can lean on that to actually go ahead and try to fundraise against. Something like that might be able to be helpful. Otherwise, if you don't have something that points to your background and your ability to have success in building out this product specifically, really, my guess is, my sense is a lot of people would say, friends and family and angels are probably your best bet for some funding early on, because those are the people, at least friends and family, those folks actually know you. They actually trust you. They actually believe in you, and they want to see you succeed. And they don't need to see necessarily a product or traction or revenue like someone who doesn't know you as well. And then angels, the angels, especially the ones that are in your space that you are actually trying to build for. And if they understand the problem, they see it, and they feel that pain acutely that you're trying to solve, they may viscerally just want to dive in and invest because of the fact that you're solving something for them specifically that they know and understand super well. So that's at least my perspective. If anyone else has any other thoughts, would love to hear it. Otherwise, we can move on.
I'll chime in real quick.
Yeah. Sorry.
Liz, do you want to go first?
Yes, please. So I wanted to just also just say in I guess perhaps the way in which I really like what Leonard said. I think it really speaks to what is your own proven track record as well, because especially because of the fact that the industry that you want to dabble into is a little bit tricky. It's cross-border, the issue of tax, and I think perhaps it comes down to what I want to suggest. Maybe if you can, the way in which you structure your pitch is also really important, because the first thing I heard the moment you started speaking was tax. And when I look at the issue of tax, especially with remote working, there has to be like a clear distinction that needs to be made between the domestic tax rules as well as the international allocation rules of double tax agreements. So it's really important to, I guess, note that only I think domestic tax provisions can give rise to a tax liability. And so the international allocation rules really regulate whether taxing rights existing. My point is the way in which you structure your pitch really matters, because as an investor, from an investor standpoint, the first thing that jumped out at me was the issue of tax and cross-border. And it makes me very antsy, I guess really anxious to kind of want to invest in such a thing, because you're talking about things that require, government laws and rules and regulations. And as an investor, I would want to really have an understanding of how that model would work. So I don't know if that's what your model is about, but because of the way you just structured it, that's the first thing that jumped out at me. And that raised a lot of, I guess my spidey senses, because I suddenly just thought, oh, is that something that I want to kind of put my fingers in, or I guess put my hand in? But that's just what I think. I don't know if there's a better way in which you can structure your pitch. I'm done speaking. Liz.
Sorry, may I respond to that? Is everyone okay with that?
Yeah, definitely. Go ahead.
Thank you. Yeah, so to your point exactly, right? So the idea is to front run the legislation and build up the foundational tech to facilitate these payments, right? So I am totally aware that as of right now, you look at the legal structure of taxation, it's not even really possible. But it will happen soon, right? So that's my primary concern as someone who's bootstrapping his own business. That's kind of the question. At what point would investors be willing to take the risk as the legislative environment evolves and starts to change? Because it is a guarantee, right? We see the world evolving. We see the social changes happening within society. And then we also see the nature of communications technology, right? We look at something like Microsoft Mesh, which is, I don't even know if it's real. I think it's a meme personally, but if that starts to come to fruition and I can front run those changes, then I will be able to hit the ground running. And that's kind of like the whole idea.
Got it. And I mean, here's a broader point, not necessarily just related to you, but there's a lot of times where founders, they think they can't get traction because they have to build their product first. But traction doesn't just come in the form of revenue or users, right? A lot of companies, they will build up a wait list. Obviously, that's more on the consumer side, so I don't know that that's always the case here in your case. But if you even were able to demonstrate that you could get a number of significant customers to pay, or some sort of like LOI or something that they're interested, right, with before you actually even build the product, I think that alone can show some sort of traction or at least consumer demand for your product. Because right now, I don't know that anyone, at least on this stage, and you probably have other investors who might be more, who have more expertise in this specific area. But we're, at least a number of us, are more generalists, right? We don't specialize in this specifically, so it would be harder for us to really understand the nuances of what you're trying to build and whether or not it could actually work.
Yeah, that's totally understandable. I mean, my only previous exit was 2017 with crypto, but that at that time, I think similar to the environment today, is a lot of fly-by-night guys who just happen to get lucky, right?
Yeah, totally. I mean, but it doesn't hurt to try to pitch it. So, I mean, I would say, like, try to be creative, right, in how you can figure out how to pitch your product and yourself, right, in general. And I think that might be interesting in terms of like how you approach it. So, but I think we'll probably leave it at that, and we'll move on because I think we're running out of time here. Yoongjun, is that right?
Yes, thank you. My name is Yoon Jung. Can you guys hear me?
Yeah, we can hear you. Great.
Yeah. So I'm kind of new to Clubhouse, but I've been listening a lot. But today's my first time speak, so thank you for promoting to speaker. So I'm running this STEM organization. We are uniquely positioned to raise the next innovators. I mean, it sounds like a very cliche, but we are slightly different because we started with 3 teams, high school teams, all doing the community-oriented project. And then now over the COVID-19, we quickly pivoted that. We decided to everything we'll do virtually. Initially, they came to our studio and doing the weekly class and the team building and work on their project. Now we grew to 15 teams, including one team in Korea. And what they're doing essentially is building the project over a year instead of a typical teen entrepreneurship program during summer. We're actually doing over a year, and that's a minimum. And then in the process, they're learning team building, presentation, leadership, collaboration, everything. And then as we rapidly growing multiple teams, actually we are launching next to 2 weeks, 4 more teams. We realized that actually we need to start considering raising the fund out of the necessity to build a platform, because we believe in one-on-one tutoring market right now, it's very exploded due to pandemic. For we feel like there will be a pent-up demand that is one-on-one highly trained students eventually want to work together as a team on the common, interested project. So we want to build this year-round, not just summer special summer intern the boot camp style, but year-round, just like any other serious extracurriculum activities, year-round ecosystem, so they can test each other's project, present their project, and work with the community stakeholders, like such as our team working on the firefighter geofencing map app, because firefighter asked us. So anyway, those are the where we are at. And when me and my co-founder start thinking about, okay, we need the funding, even though we are self-funded right now with these classes, to grow faster, keep up with the demand. We kind of thinking, where do we start? So I think some of the fans already said, if you're new to the fundraising, how do you get into the network, right? So recently we got invited to this very exclusive network place. It requires the membership fee. Membership fee is not bad. It just I do have a lot of things to manage daily, because all our startup teams, so we have to go check, make sure they are doing well. Is it worth, from my situation, to join this type of exclusive network, so that we can start learning about how to get this funding, process all that? That's my ask right now here.
Got it. Anyone on stage have thoughts on this, or other moderators? If not, I can chime in with some quick thoughts. I haven't heard of that in the U.S. I think that would actually be frowned upon here. I just, most investors definitely, one, they don't want to be paid to get pitched. And I don't know that they like the idea of having someone, even as an agent, getting paid to direct startups to those specific investors. Like, that's sort of just a no-no. I don't know if that is different in Korea. Like, Justin may know better, or Sean.
Oh, this is the American special network
Oh,
forum. Yeah.
okay. I have not heard of that. So if anyone else here has heard of something like that, definitely feel free to chime in. I personally would stay away from that. I don't know what they're offering, right? I'm guessing they're offering access to investors. Is that correct?
Potential investors and training and like Shark Tank style, pitching event. All those things sounds like right, but my biggest concern is my time is so divided and fully booked already. Do I really want to invest my time and money there? So I'm kind of debating.
Yeah, my gut instinct is no. Don't do it. I would, maybe you can convince me if you had a little more detail around it, but one, if you have a strong product, strong traction, strong team, something, right, you can get into any accelerator, which will actually pay you to actually be part of that accelerator, right? And you obviously have to give it some equity, but it's a good way to get off the ground. You'll get the access to investors. You'll have mentors who can kind of help you figure out how to build your business much faster. So that is typically the way for a lot of folks who don't already have a built-in network of investors, let's say, that they might go and try to build that business. Anyone that is sort of asking you to pay them, I would be very skeptical that they have actually delivered. Now, you tell me who they've actually worked with, and if those companies have actually IPO'd or are significant exits. And the founders actually back them and say, hey, this is a great group of folks. Fine, maybe I'll take that. But I haven't seen that. I haven't heard of that. So it'd be very difficult to actually say, like, yes, that's a great way.
Okay, thank you so much. Yeah, they didn't specifically share what kind of companies they kind of connected with these people like me, but I wasn't sure because that was one of the reason I was a little skeptical, because there's no like a data. They just telling us how many people are already in their network. So I was like, little skeptical because I want to see the data, like what kind of companies, what kind of networks, right?
Yeah, I would run from that, to be honest. If they're not even sharing with you who their actual investors are or the people that have been through the program successfully, they're hiding something, right? It feels and smells like a scam. And you have to realize that in the US or just in general, there are a lot of people that will target founders because they think they're desperate for fundraising, et cetera, right? And so I got approached by folks when I was fundraising early on that, they were charging a lot, they were asking for a lot of equity. Like, it's just, people think, oh, hey, here's an opportunity for me to make some money, right? And it's not really the way of at least Silicon Valley, right? Like, people here never charge to get an intro, right? Like, that's just unheard of. And a network like that doesn't feel right either. Now, there are obviously like co-working spaces that have a lot of founders, and they obviously are providing a service of like, hey, you can work here with other founders and network with them and get to know other investors, et cetera. Like, that's a different model. But the one that you're sort of explaining doesn't smell right to me. So.
Okay, thank you for the good advice. So then I think the first step me and my co-founder should then start is getting into the accelerator program.
Yeah, I think accelerator program, there's a bit where if you can actually build out your product and get traction by yourself without having to go through an accelerator, you can easily go and fundraise. I've had almost all my friends typically just fundraise straight without having to go through an accelerator. It's because they're able to figure out like how to, sometimes a lot of them are B2B sales. And so like they know how to sell into customers specifically that would want this product. So they already can figure out how to make their startup get off the ground. But if you don't necessarily have that initially, then yeah, you probably want to look into accelerators that can kind of help you with that initial step.
Okay. Thank
and
you.
Yoonjung, could I ask a quick question? Where are you based? Are you based in the US or are you based in
I'm
Korea?
at Palo Alto.
Oh, you're in Palo Alto. Okay.
Yeah,
So
and a lot of our students in the startup teams, actually a lot of CEOs, like big tech companies, because they said that they like how we position and the training empowering our students. So we have a lot of actually high-powered the company, the tech exec students, children in our program actually.
That's you already have a built-in network.
I know.
You don't even need
Somebody
to go to anyone else.
Yeah, somebody told me that we just need to go make a testimonial from these top parents. So we're actually thinking about that too.
No, for sure. I mean, like that is the best place to go. I would definitely skip what you just mentioned and go to the people you're working with already, and that's the best place to start.
Right.
Yoonjung,
so I think yeah. Go ahead.
I would love to touch base with you offline at one point. Love to kind of learn a little bit more about what you're doing and see if I can maybe make some introductions. That would be a better fit.
Oh yeah, thank you so much. Actually, one of we call it super fan parent, because he said initially he's just sending his son, but now he said, what can I do? I can spend 2 hours every week for ACF, and he's actually Google senior software engineer, and he's actually donating some extra fund to us as well, because he truly believes in what we are doing is empowering his son. So we feel like we do actually touch on with some special connection and relationship with the parents.
If I can quickly chime in, Yoonjung, so have you considered grants? Because there are a couple of STEM grant funds that are, I guess, trust funds that are, I know, but they're based in the UK. If you would like, I could also make another introduction, because I feel like this could be in line with what you're doing. You said you run a STEM program. Is that correct?
Right. So we actually, these are the paying classes startup teams, but actually for a year, we are running called the monthly app challenge, when we ran every single week for the 1 year. We didn't even skip even 1 week, where we globally bring the audience, doesn't matter what, the experience in coding or not, a live coding workshop for free to promote our applied coding computing with the app challenge. And that one is like we want to get a grant, because now the founders, 3 high school students, founders actually making as an ebook. So we want to promote the applied computing, not necessarily just with this paid student startup teams, but also through this grassroots movement. So those things we want to actually look for the grant opportunity if I can connect with your leads.
Sure. Are you comfortable disclosing your ask on the platform, or you want to take it offline?
Yeah, I mean, we can take it offline, but either way, it doesn't really matter.
Okay, that's fine. We'll speak offline. I think I might be able to connect you to a couple of grant trust funds that I know, but they're based out in the UK. But yeah, let's see if I can be able to assist you as well.
Thank you so much, Liz. And Sean, I will actually connect with you offline as well.
That sounds great. Looking forward to it.
Fantastic.
That's all. Yeah, that's all from me. Thank you so much.
Thank you. And Will, if you're there, we'd love to hear your question. Otherwise, we'll wrap up now. And so it looks like he...
Thank you. So just would like to listen to different thoughts about the current fundraising situation, because personally we are also a family office. We're investing in artificial intelligence, supply chain, smart tech, and different type of things. But just like to listen to different thoughts right here. We have got one accelerator in China. So we are mostly helping a lot of founders in Asia as well to help them do fundraising. And personally, we also are serial investors. So just like to listen the current this year challenge and see where there are different thoughts. Last 2 years, we found that the cash right now seems to be less people investing in startup. But I can see that now, as the market is getting better, it seems that it's on a better track. So just like to see how is the recent situation.
No, fantastic. And thank you for joining us today. I know, at least when we talk about trends, Q1 of this year has been amazing, at least in the US, right, from a fundraising standpoint, both in, I think, number of deals, transaction size, valuations, like probably across every metric. I haven't seen the official numbers yet because we're still, I guess, technically in Q1. But it's anecdotally, I've seen such a great rush here, and I'm sure other folks, Sean, Liz, you guys probably can weigh in there as well, or PB.
Yeah, I agree. I think there have definitely been a lot of improvements in regards to just the ticket sizes. I think if you look at from last year, I will give the example of Africa. Africa raised a substantial amount of money in during COVID. So I actually agree that the trend is starting to be a lot more founder friendly, like what Sean had said. I think it's so true. COVID has, at a time of the pandemic where everybody probably would have thought that things would slow down, there was actually an increase of investment that took place throughout last year as well as even in this first quarter. So yeah, I think the trend is upward moving in my opinion as well.
Hello. Yeah.
Yeah. Go ahead.
Yeah, it same goes for the Indian market as well. It has been number of deals, number of the check size, everything has increased, and more of all, I'm also seeing there are the environment is becoming more founder friendly as well. So the price and the valuation, everything is favoring founders these days. So it's slowly becoming founders friendly, and upside, everything is upside. The real numbers is yet to come, like Leo also mentioned. Will be updated. I can share maybe next session that we do. But yeah, right now it has been amazing, amazing quarter generally for us and for the whole ecosystem as well.
And I'd like to just add real quick, we definitely know that there's more investments getting poured in terms of deals, in terms of size, in terms of valuations, and probably even in terms of terms. But we're also seeing a lot more exits as well too. And I think that's going to be great because now we're going to get all the investment partners and they can start liquidating. Some of the LPs are going to be able to get their money back, and they're going to look at other new investments as well. So it's going to be very exciting. Love to kind of see how this all ends out in the next 12 to 24 months.
No, for sure. I mean, and when we think about kind of how VCs get funded, right, the LPs themselves, they typically only put in, I think, around like call it 5, maybe 10% of their overall capital into VC, right? And so it's such a small portion, but we talk about rebalancing, and it was interesting because 1 year ago, literally 1 year ago, everyone was saying, "Oh my God, everything's going to plummet. The valuations are going to take a dive." Deals obviously dipped a little bit because a lot of people were doing inside rounds. But I don't know that anyone could have predicted that it would come back this quickly, this strongly, at least in the U.S., right? Like, I have that perspective. And so it has been phenomenal what a change, what a year has done to change kind of the venture landscape. So, I am optimistic about kind of this next 2 quarters, call it, and then we'll see kind of how things level out potentially after that. But it is definitely a great time to be fundraising for founders. But cool. All right. I think. Will, go ahead. Do you want to chime in with it?
Just thanks for everyone. It's great insight because I found that everyone have got different information and so from different markets. So just thanks for all the sharing. It's kind of like similar to what I saw in mainland China as well. Their fundraising seems to be getting up. So it seems that we are on track globally. Great. Sounds great.
Yeah, and I mean, if you have any because I don't know that we have anyone here who's an expert in the Chinese venture market. Like, we'd love to kind of hear your thoughts, like, if there's anything different that you've seen.
Because last few years we focused on investing in AI and also some of their consumer tech, and last year was fundraising is a bit more difficult. I guess as people are more cautious. Last 2 years. And then this year is coming up, and people seems to be quite positive. Actually, last year since the Q3 starting, I would say the fundraising has been getting a bit up, and now this year seems people are quite positive about the resignation and everything. They believe the economy is going up, so people are more willing to invest. So I would say it's on a good track. So especially for us, because we're more on artificial intelligence and also SaaS and different types of like a tech firm. And we work with a lot of people in Hangzhou, and they last 2 years, I think they raised quite a lot of funds. So I think everyone seems that not just in China, it's like globally, it's now the fundraising is creeping up. So that seems to be on a good trend.
That is fantastic. And Sean, go ahead if you want to chime in.
I was just actually going to ask Will if you're only investing in China or are you looking in international markets? Are you investing in the U.S. Or are you investing in Israel? Or are you looking at other markets?
Like for Israel, we have kept a lot look at that. Last 2 years ago, we also got a visit on the Israel startup. U.S. we basically have been investing for a long time because I started my career in investment banking and Morgan Stanley in the States. So I got a lot of friends there, and then nowadays when now we have an investment fund here in Asia. They just keep on sending deals for us. So we invest quite a lot of startup like Airbnb, Spotify. This are like 6 to 7 years ago, and then now it's going very well. So we keep on doing that. And Israel for sure is, I think, is one of the big topics, especially when I'm based in Hong Kong. There are quite a lot of tour. Actually, we arrange some tour going to visiting Israel every year. So I would say this is also something quite interesting. But they are not something, some area when I'm looking at, it's not something that I'm first specialized in. So I have been having a look, but I haven't really done the investment yet because I saw a lot of different type of startup like military, medical things, and those areas not our expertise. So I'm still keeping a look, but definitely if there's any deals related to our topic, so we can also have a look as well.
That's awesome. Thanks. Thanks for that. I've noticed that there were some, there's obviously been some big regulation changes, and you mentioned medical and you mentioned the military. So they've been impacted kind of, significantly. And I do know a lot of those individuals that were in China that had funds that were investing in the U.S. and what they've done is they've kind of looked at other markets, whether it be Israel or even Southeast Asia. So I was just curious to see if you were investing outside, but that's really helpful. Thanks, Will.
You're welcome.
That's great. Well, I think we've come to the end of our evening, or morning, I guess, in Asia. And so thank you, everyone, for stopping by today. It was such a pleasure to be able to really chat and talk amongst ourselves to really get a better sense of the challenges that founders face when they're doing fundraising. And so thank you for everyone that came up to the stage to ask their questions. Thank you, moderators, for really providing such a balanced perspective as we were sort of addressing a lot of those questions and even the questions that we had amongst ourselves. So this has been fantastic. Thank you again. For anyone in the audience, if you are interested, definitely feel free to follow this club, Asian Startups. Just go ahead and click on that little green Monopoly house in the top, and we'd love to see you here again. We will probably likely even start to do more days or times as well, but we will always be here on Tuesday nights at 7 p.m. Pacific and 10 a.m. Asia or Hong Kong time. So, but yeah, that's it. And so thanks, everyone. Feel free to, if there's anyone that you particularly want to follow, go ahead and do that. Otherwise, I'll be shutting down in 5 seconds. 5, 4, 3, 2, 1. Bye-bye.
Bye-bye.
Bye,
Bye,
guys.
guys.